Hello and welcome. Whether you are dollar cost averaging down or just want to bring your holding in these stocks to size, here are 3 exceptional stocks that should be pushed up your watch list. These are stocks that everyone agrees should be in any dividend investor's portfolio. These are stocks that you can never go wrong having. These are hot blue chip stocks that hold their own in any dividend focused portfolio. To show respect and appreciation of your time, let's get right to it. Disclaimer: this are all my opinions and not to be considered financial advice. Number 3. JP Morgan Chase & Company, ticker symbol JPM. Current price of $113.43. JPM is down by 27% on the 1-year charts. JPM is very close to the all-time 52-week low of $111.89. Market cap of $340.30 billion. Current dividend yield of 3.47%. PE ratio of 10.16. Payout ratio of 29.35%. 5-year dividend growth rate of 14.99%. So why should you load up on JP Morgan? This is simply the biggest bank in the United States with total asset of around $3.19 trillion. Strong business across consumer and community banking, corporate and investment banking, commercial banking, asset and wealth management. Number 1 in everything including U.S. credit card sales and U.S. retail deposit share. They serve more than 63 million households. Their website is visited more than any other banks in the USA. More than $1.1 trillion in credit and debit card sales volume. Balance sheet strength and strong fundamentals. 5-year stock growth of 28%, 10-year stock growth of 215.17%. With the Fed set to continue increasing interest rate to fight this stubborn inflation, JPM is only going to grow stronger. According to 19 analysts, JP Morgan has 11 buys, 6 holds and 2 sells. Target high price of $200 and target average of $155.28. Which means JP Morgan may be 35% undervalue. JP Morgan's 5-year total return, which include price return and dividends, beats the S&P 500 hands down. Number 2. The Procter & Gamble Company. Ticker symbol PG. At the time of this video, Procter & Gamble has a current price of $133.32. Procter & Gamble is up by 0.41% on the 1-year charts. Procter & Gamble is very close to its all-time 52-week low of $129.76. Market cap of $331.46 billion. Current dividend yield of 2.76%. For investors, that's 91 cents per share a quarter or $3.65 per share a year. Procter & Gamble has grown their dividend for 65 years. Procter & Gamble has a payout ratio of 60.72%. So why else should you consider loading up on Procter & Gamble? Procter & Gamble have one of the greatest economic moats with their line of products and offerings. They have a nice consistent dividend growth. Procter & Gamble yields 2.76%, which is one of the highest among its peers. Procter & Gamble has a 5-year dividend growth rate of 5.48%. They have balance sheet strength and strong fundamentals. 5-year stock growth of 48.36%. 10-year stock growth of 122.83%. Procter & Gamble currently trades at a forward PE of 22.66. According to 16 analysts, Procter & Gamble has 16 buys, 6 holds and target high price of $185 and target average of $168.73. Which means Procter & Gamble may be 25% undervalue. Procter & Gamble's 5-year total return, which include price return and dividends, beats the S&P 500 hands down. We noticed you still having liked, subscribed or turned on the notification bell. Please kindly encourage us if you've gotten some value from this presentation. Your like and subscribe will help us know that you like content like this. Please join our community and be a part of our growth here on Wealth Listicles. Thank you. Now let's move on. Number 1. Microsoft, ticker symbol MSFT. At the time of this video, Microsoft has a current price of $244.97. Microsoft is up by 4.82% on the one-year charts. Microsoft is very close to its all-time 52-week low of $241.55. Market cap of $1.81 trillion. Current dividend yield of 0.99%. For investors, that's 62 cents per share a quarter or $2.48 per share a year. Microsoft has grown their dividend for 18 years. Microsoft has a payout ratio of 26.48%, which means that there's great room to raise the dividend. So why else should you consider loading up on Microsoft? Microsoft has one of the greatest economic moats with their line of products and offerings. This one truly needs no introduction because their product and footprint is in almost every household and businesses. There's hardly a computer or business that doesn't use one of their software products. They have a strong fundamental and strong moat. They are constantly innovating. Their cloud business is growing. Their business is growing across business application, security, gaming, application and infrastructure, data and AI, developer tools, Power Platform. Most popular brands include Microsoft Windows, Microsoft Office Suite, Microsoft Azure, Microsoft Teams, Xbox Gaming, LinkedIn, Microsoft Surface. The subscription model for all this product is generating boatload of cash. There are just too many of their products that consumers have no choice but to use on their computers. They're constantly buying back shares. They have a nice consistent dividend growth. Microsoft yields 0.99%, which is one of the highest among its peers. Microsoft has a 5-year dividend growth rate of 9.6%. They have balance sheet strength and strong fundamentals. So much cash flow. 5-year stock growth of 245.66%. 10-year stock growth of 697.95%. Microsoft currently trades at a forward P of 27.16. According to 25 analysts, Microsoft has 24 buys, 1 hold, and target high price of $411 and target average of $353.67. Which means Microsoft may be 40% undervalued. Microsoft's 5-year total return, which include price return and dividends, beats the S&P 500 hands down. That's it. We just can't list them all. Remember, all we do is bring you the lists for entertainment. It is your duty to do your own due diligence and/or consult an expert and invest your hard-earned money wisely. Please don't leave us without smashing the like button and give us a subscribe. Think of it as a tip for my hard work. I will greatly appreciate it. Thanks for watching, and I'll see you in the next one. Disclaimer: please note that I showcase these stocks for educational purposes only and shouldn't be taken as investment advice. I don't personally own all these stocks, just some. Please do your own due diligence and/or consult your expert investment advisor, as more fundamental analysis may be needed before investing. Please also note that the past performance of these stocks does not guarantee or indicate similar future performance.